Welcome to the Pirls Stock Market Commentary video for August 14th, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio is virtually unchanged at 1.87 from 1.89 last week, continuing in bullish territory. The total count of securities in bullish or bearish patterns increased 2% to 3,163. The count of bearish stocks increased 3%, while the count of stocks in bullish patterns increased 1%. The Pirls P&F Market Breadth Summary Chart shows us a market now 7 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 9 points for the 7th decline in 26 weeks. At a positive 588.10 points, it has formed a new high and continues above all remaining 4 tops above plus 100 and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in accumulation mode on lower average daily volume. Momentum, now fallen to 107.31 from a positive 144.52 a week ago. The CCI 20 daily continues outside the plus or minus 50 range required for a valid zero-line reject long entry signal in a Woody's uptrend begun 4 weeks ago. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 15 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly fell to 184.30 from 199.79 last week after forming a zero-line reject long entry signal for Monday, July 11 open. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation, the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: banks, oil, and some tech on top. REITs and some tech on the bottom. Bullish, KBW Bank continues in the top 5. Networkers have entered the top 5. Disk drives has left the bottom 5. Gold and silver has left the top 5. Bearish, REITs continues in the bottom 5. Computer hardware has entered the bottom 5. Oil and oil services have entered the top 5. Brokers and semis have left the top 5. Focus this week from www.zerohedge.com. Currency wars escalate as Fed treasuries in custody tumble to 2012 lows. By Tyler Durden. The following are some key points and a chart. According to the latest Fed Reserve balance statement, Treasury holdings in custody at the Fed, which peaked at $3.03 trillion in July 2015, tumbled by over $17 billion to $2.871 trillion as of the week ended August 10th. The hypothesis is that OPEC countries, such as Saudi Arabia, are once again quietly selling treasuries to raise cash in an environment of low oil prices and the consequent budgetary tightness, according to Citi's Jabaz Mathai. Bloomberg cites strategists who say that the drop, quote, reflects FX operations by some of the smaller central banks, end quote. The drop probably has been driven by, quote, the smaller central banks being forced to sell to raise dollars to defend their currencies, end quote, or simply to fund, quote, general fiscal stimulus in struggling global economies, end quotes, according to Ian Lingen. In other words, while the world is blissfully content to ignore the currency wars taking place behind the scenes, various central banks are scrambling to defend their currencies by selling USD assets. This confirms what we wrote a week ago in, quote, Why Oil Under $40 Will Bring It All Down Again. That's where SWFs resume liquidating, end quote. So far, judging by the market's relentless grind higher, few equities have been sold. However, the U.S. Treasury market appears no longer immune to the recent drop in crude oil, and this is being reflected in treasuries parked in custody at the Fed. So, while the bulk of traders take off the next 1 to 2 weeks for vacation, keep a close eye on this balance of FX war-waging EM sellers versus yield-chasing DM buyers to see who ends up winning, at least in the short term. Also of note, if the recent squeeze in oil fails to push the price of crude higher, and worse, if oil again retests $40 or lower, the next question is, when will reserve managers shift away from selling just bonds and resume liquidating stocks, as they did in late 2015 and early 2016, something we cautioned about 1 week ago? Thank you for tuning in for this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pirl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant, relaxing weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.